Rooij.
Good morning, good afternoon. Welcome to Midday Market Update for February 9th, 2021. My name's Kevin Hill, taking you through the freight markets today with, as always, Michael Vincent over here to my side.
Hey, good afternoon, everybody. Beautiful day. It's a beautiful day here, right? We should be out golfing today, but we're going to do this first.
We are
because we got a great show, and it's interactive. And so get your questions and comments in. What are we on? We're on FreightWaves LinkedIn and Facebook channels. Get your questions, comments in, and we'll get to those. We got a really good show. It's we're going to be talking. Who we have here? We have. Now I just learned how to pronounce this gentleman's name about a half an hour ago. Jelle de Rooij. Who is the, and he'll correct me when he comes on, but Senior Manager of Supply Chains at Holland International Distribution Council. And then also Steve Ferreira, CEO of Ocean Audit, is going to be on today. And of course, our market experts, Zach Strickland and Anthony Smith, our lead economist, Nick Austin with weather, and Andrew Cox, as always, with news.
With news, yeah. Let's jump right into the headlines then. Michael
right
Vincent with Andrew Cox, and TFI has some comments during their latest earnings announcement on the recent acquisition of UPS Freight. What do we have, Andrew?
TFI International plans to aggressively improve margins at UPS Freight after its $800 million acquisition closes by reining in unprofitable business. The plan? Renegotiate with customers or cut them loose. CEO Alain Bedard spoke about UPS Freight selection during the company's fourth quarter earnings call. He said there is some freight that the company just doesn't make money on, and that was normal for UPS because of the bundling strategy that the sales team implemented. Bedard was quite blunt about UPS Freight and its customers, but that shouldn't come as a surprise to anyone who knows him. Bedard built TFII into one of North America's largest trucking and logistics companies through acquiring firms and turning them into profit engines. Bedard set a target of bringing UPS Freight to be renamed T-Force Freight to an operating ratio of 96% at the end of the year within the next 12 months. It currently sits at about 99%, which Bedard bluntly stated isn't normal. Bedard's long-term vision for T-Force Freight includes getting the operating ratio below 90. He singled out industry breadwinner Saia and Old Dominion as measuring sticks for LTL performance.
Caught one of his presentations, his analyst presentations live before, and to say he's blunt is an understatement, I think. He's entertaining. It was great.
I imagine would be by his quotes. It sounds...
it is. He's got great quotes, great zingers. What about TFI's Q4 performances overall?
Yeah, the company's Q4 performance seemed to be a bit of an afterthought, given all of the focus on the UPS acquisition during the call that is set to close in the next couple months. But revenue growth was up 13%, adjusted net income was up 49%, and TFI handily beat consensus expectations by 16 cents per share. So overall, a very strong quarter and a strong year overall for TFI.
Yeah, I love T-Force Freight. It's a that's cool.
It is, yeah.
I like that. You can see a little insight there into his personality as well with T-Force Freight, which is pretty cool. But I mean, this renegotiation and unbundling certain things is pretty common, right? I mean, you see that in truckload as well, where there's certain lanes that you take because they're for the gravy, right?
Yes,
and in LTL, it's not uncommon to have that as well. You have certain lanes that aren't as good, but for the overall national account, it's better. It's just this one crossed lines with the rest of UPS. So
it'll be interesting to see what TFI
does
with them.
It very well.
Let's move on. The SPAC train keeps on running, and certainly like alternative fuel vehicles for trucking.
Yes, either get with it or get out of the way. We've got another SPAC coming to the EV market. This one is electric chassis maker Exos Trucks is in talks to go public again by a SPAC that could lead to a valuation upwards of $2 billion. California-based Exos makes customizable chassis with the wiring, the battery mounting, and axle mounting systems for medium and heavy-duty electric trucks. It has an impressive list of customers so far, including UPS, armored truck company Loomis, and a subsidiary of Toyota. Exos raised $20 million just last August to help meet demand for underpinning medium-duty regional and last-mile delivery trucks with its X platform. The SPAC it is set to merge with is NextGen Acquisition Corp, which is in discussions with investors about raising a PIPE or a private investment in public equity. If successful, we could get an agreement as early as this month. Kevin?
That's interesting, Andrew. So is this a pre-revenue company? I know you mentioned customers there, but that doesn't really... I'll always tell you if it's a revenue-generating business yet or pre-revenue.
They have some contracts on the board, as do almost all of these SPACs, it seems. They all set out revenue targets for 2-3 years down the road. I'm not sure about their 2020 revenue, but they have set pretty lofty targets for a couple years out in their S4.
That kind of goes with the others that are SPACing right now. And I was talking to Alan Adler, who covers this for us on FreightWaves.com, and who wrote this article. And, he's seeing it's like a snowball. It's just getting bigger and bigger. SPACs, yeah. SPACs are just, they're coming out right now, one after the other. So it'll be a market that we keep in touch with here at FreightWaves.com, and we'll be following that very closely. Let's pivot back to LTL and talk about Saia.
Yeah, just that breadwinner I mentioned a moment ago. Saia, LTL carrier, is looking to expand its network in 2021 while also taking yields and margins higher. Saia reported earnings Monday, outpacing street estimates and bringing in $1.51 per share. That's nearly double last year's Q4 earnings per share of 81 cents. Saia plans to open at least one terminal in the first quarter, and management is hopeful that it can add between 4 and 6 for the full year in total. On Monday, in a call with analysts, management said those plans include a large facility near the company's headquarters in Northeast Atlanta, as well as building out in a market where they're not well represented, including Wilmington, Delaware. The goal is to plant a flag in new markets and to expand the footprint in existing markets to improve the company's overall freight mix. Terminals closer to customers are expected to reduce turn times and improve network efficiency. In 2020, the company opened one new facility and replaced 5. Saia has grown its presence significantly in the Northeast in recent years. The company began opening terminals there in 2017 and accelerated those efforts after the bankruptcy of New England Motor Freight. Saia has roughly 20 terminals in the region currently, but the Northeast area will continue to be a focal point for expansion. Kevin?
So yeah, that's
another tough road. I mean, you talk about TFI, who's got some very successful history with LTL, right, and taking over UPS, and they've got a tough thing to do. Even though it's common to have those bundled type of things, this is different because you're bundling LTL with the parcel, right? You've got Old Dominion that kicks butt constantly. I think they were founded during the Great Depression, have been kicking butt since they started. Saia's another one that has done a very good job of getting that freight mix right through pricing, et cetera. And now when you start looking at terminal location, that's a little bit bigger of an investment to alter the freight mix or lanes, maybe more than freight mix. I'm not sure if they're referring to commodities or the lanes that they're trying to establish, but very difficult, especially when you go in with New England Motor Freight, which fairly decent run company files bankruptcy into a area that's difficult. So it'll be interesting to watch. LTL's a different animal.
It will. I'm curious to see how Saia grows and gets more efficient, because they've been doing a good job over the last couple of years. Point of sale comes out, what is this? This Tuesday. So it came out yesterday, didn't it, Andrew? And we're talking about Peloton and supply chains there.
Yeah, Peloton keeps making news on the supply chain. They reported stellar earnings last week when they reported fourth quarter earnings, growing sales 128% sequentially from Q3 to Q4. They've now grown sales sequentially by triple digits each of the last 3 quarters, so compounding growth there. They also surpassed $1 billion in sales for the first time in Q4 and has turned a profit for 3 consecutive quarters. But the stock sold off about 8% upon the news of the earnings report, and that's because Peloton's supply chain has been broken by COVID. Its customers are absolutely pissed, and it thinks that $100 million will remedy the situation. CEO John Foley announced on the earnings call that it would be investing $100 million to speed up the delivery for its products. He acknowledged the problems with delivery delays that are stretching into months, not just weeks anymore. Part of that $100 million will go towards the use of air cargo rather than ocean freight to move products from mainly Taiwan to the U.S. This will not be a cheap endeavor. And if we're being technical here, temporarily paying elevated air cargo rates is not exactly investing in the supply chain, but it is burning cash to get out of a hole, and it's a completely necessary evil right now with the month-long backlog that Peloton has. Foley said Peloton is expecting to pay 10 times the freight and logistics cost per unit over the next several months as it looks to avoid port congestion and alleviate that month-long backlog.
So every time I hear Peloton, I think high margin, like super high margin. It's like, just throw air. Who cares, right?
Yeah.
But it really isn't that high of a margin of business. So is long term, is air cargo running that route, is that sustainable?
I can't see it as sustainable. The bikes are 140 pounds, the treadmills are 450 pounds plus, so it's not ideal for air cargo to move these type of products across the ocean, but the company's usage of it is indicative of really how big and bad the problem is for Peloton. Foley and Peloton know that they're facing a rapidly closing window to lock in customers. The vaccine rollout is rapidly accelerated. We vaccinated 2 million people in 1 week, or in 1 day last week. They bring with them the promise of normalcy. And for people that go to the gym, normal means gyms at full capacity with full classes and no masks. Also, competition has quickly risen to meet the surge in demand for at-home equipment. Back at the beginning of the year, or back at the beginning of the pandemic rather, in March, Peloton was really the only name in town. But now, Bowflex, Nautilus, and SoulCycle have all spun out quickly and built up competition that's much cheaper and delivers within weeks and doesn't have major delays. So the time for Peloton to be the only option in town is quickly closing, but demand remains stratospheric. They can't make enough products to sell right now. Their products are in such demand that Peloton users are even willing to start paying for the product months and weeks before it delivers. So the surge in orders and delayed shipments have left Peloton with a pile of customers' cash. This means effectively, the customers that are paying for Peloton products up front before they get it are financing these supply chain efforts. The company does expect the shipping times and delays to return to normal towards the middle of the year and the second half of the year. The most important thing for the company is that its U.S. manufacturing facility in North Carolina that it acquired through its Precor acquisition in December should be producing Peloton equipment by the end of the year. That will bring some domestic manufacturing capacity and alleviate having to bring all those products from Taiwan.
I hear new slang every day from the younger generation around here, Peloton. I had never heard Peloton before.
Yeah, I think he just, when I was in St. Lucia, there's La Petit Piton and Gros Piton, the two volcanoes there in Ferreira. I thought he was referring to that. I didn't know Peloton was selling or shipping from St. Lucia, but
it's a pronounceable ticket, guys.
Seriously though, Andrew, and when we talk about this, their supply chain was broken. I want to just ask you this really quick, your opinion on this, because I'm looking at this and what could they have done different? Really, it was like the perfect storm for them. The massive amounts of demand, a really good product, and you know, because of COVID, et cetera, we know what the reasons why it became so massively popular, and then the supply chain broke. It wasn't like they didn't have any type of supply chain. It's like many other companies where what could they have done differently? Had their own ships? I mean, isn't this more they spend $100 million and hopefully, like you said, things get more normal in the future and they can handle the demand, or what's your thoughts on that?
Well, honestly, I think they just should have been more transparent with their customers. I think that's what people are most upset about. It's not that Americans haven't gotten used to shortages at stores or not had their products delayed for weeks or even months during COVID. It's that these people are paying $2,500 plus for a bike. They're being given delivery times that are completely unreasonable, that the company knows it can't meet. Then when it comes, the day of delivery, they play the blame game and post blame on their last mile delivery providers, all the while taking payments for the product before it even gets there. So it's not so much this. You're right, it was a perfect storm. From a supply chain investment standpoint, I think the Precor acquisition in December was one of the best moves they could have done, nearshoring some of that production. But from a supply chain standpoint, they've done everything they can. The only thing they could have done better is just be more transparent and upfront with customers when they're buying, knowing that delays are going to be longer than what they said on their website.
Gotcha.
Transparency up front is always wins out in the end, I think. Definitely. Well, thank you very much, Andrew. Really quickly, if you're not subscribed to the Point of Sale, Andrew's newsletter that gets delivered on Mondays and Thursdays, where do you go?
Yeah, you go to freightwaves.com/POS. I give, as you said, a twice weekly newsletter on the consumer, retail, and retail supply chains. Join me.
Thank you very much, Andrew. Always interesting.
Yeah, absolutely. I love reading his stuff, and I love when he comes on and he's got great insight into.
He does. He has
things,
great insight.
Yeah.
New words that you learn. Peloton, right? You know.
Yeah, and the POS.
The POS, Peloton, yeah.
Which isn't new slang. It's an interesting use of old slang, but I guess weather is the topic of du jour, right?
Du jour today.
We have more weather, I believe, up north. I think it's winter in in Ohio River Valley and stuff like that.
It seems to be winter everywhere.
Which is going to be coming pretty
now,
soon,
doesn't it? Yeah, it really does. So yeah, I mean, it's always interesting. Somehow February always it just lingers, right? It gets kind of worse.
It's a very, very long month, and I think Nick woke up and saw his shadow this morning, but I'm not 100% sure. Nick, did you in fact wake up this morning and see your shadow, or where were we at?
Yeah, so winter weather, February, can be very interesting in some parts of the country. It's actually starting to warm up a bit down here in Chattanooga, other parts of the South, but that's going to change next week. You can get really drastic changes, and what we're expecting as far as the worst weather for truckers and supply chains, freight movement out there over the next few days, is a pretty large area west to east from the plains all the way to the mid-Atlantic. We're going to see a band of freezing rain and icy conditions setting up. So we'll go to that and show you where that's going to happen here in Sonar Critical Events. We have it up on the map for you. And the region that you see highlighted there in that kind of teal color, we'll call it, that blue-green color, that's where we're going to see the bulk of the icy weather. So from a quarter to even a half an inch of ice accumulation and build-up possible in some areas from eastern Oklahoma all the way to the Ohio River Valley, some parts of the southern Appalachians, and even a mix of ice and snow in parts of the mid-Atlantic, possibly as far north as Philadelphia, the Elizabeth, New Jersey market, and places like that, even the nation's capital. So this is not only going to cause problems with surface transportation for truckers out there, because really nobody can drive in ice, especially if it's going to get that thick, even on some of the roads, not just bridges and overpasses, but there'll be problems with surface roads and interstate travel as well. Probably delays in air cargo with at least the potential for flight delays or even airport closings, possibly in some cases. And some of the ice can even get as far south as Little Rock, Memphis, even Oklahoma City. So it's going to be a fairly significant event, I would say. In some areas we'll get snow too on the northern end of the storm, especially up in the mid-Atlantic. So pretty bad stuff here overall. And what's happening is that really, really cold air from the northern plains and the Great Lakes is kind of shifting a little bit southward over the next couple of days. So the worst of this ice storm will be Wednesday and Thursday, but the impacts will last probably until Friday, maybe even in the weekend in some areas where there may be power outages and some roadblocks because of power lines and some tree limbs down here and there. So it's just kind of going to be a mess for a while in those areas. We'll talk more about that Arctic outbreak of really cold air that's up across the plains in the Northeast. That'll be sticking around all week. And we'll talk more about that later in the show, as well as a new article that's up on FreightWaves.com, a fun article about some more great weather-themed movies that truckers can check out while they're on the roads during their downtime.
Sounds great. Thanks for the update, Nick. I will say that I got a text this morning from Tulsa, Oklahoma. That's where I'm from. And it was 17 degrees this morning with a wind chill of 2.
Ooh.
Yes.
Ooh.
Not
Is
good.
that why you're always whistling Living on Tulsa Time?
It is, yeah. It's Don Williams. Great song.
It is a great song.
It is. Living on
It
Tulsa
was pretty
Time.
cold. It was like 27, I think, yesterday morning here.
Yeah, it was chilly.
Fairly
I walked out,
nippy.
there's ice on my car.
Yeah.
Yes.
Yeah.
Not quite that chilly today, though.
Yeah.
Hopefully it doesn't
So what's
get
your
chilly
all-time
again.
weather movie? What do you off the top of your head? Poof, weather movie.
Twister.
Twister. Day after tomorrow? No.
No, Twister. It was in Oklahoma, too.
Sharknado 2.
Well, Sharknado is a classic. I think it's Zach Strickland's favorite.
It's Tsunami, yeah.
Yeah, it definitely
2012. That's kind of weatherish. I don't know.
is. It kind of. Climate change, I suppose. But we have Zach Strickland, our Director of Freight Market Intelligence, here right now to talk about the freight markets and if those are heating up or cooling down.
Yeah, so the freight markets are slightly cooling down, and that's appropriate this time of year, of course, specifically for that reefer sector. So the reefer market, especially in the Midwest, is actually what's propping up a lot of the tender rejection rates in the United States right now. The rest of the country, such as the Northeast and the Midwest, or not the Midwest, but the Northeast and West Coast, I should say, have started to stabilize after having a relatively tight go at it last week. So tender rejection rates in the United States overall fell from about 22.9% late last week to 21.7% this week. And a lot of that stabilization came from the Northeast and the West Coasts. We saw Los Angeles that was seeing a steady rise of rejection rates on not a lot of higher volume, but capacity seems to have started to normalize a little bit. Now, again, the capacity is still extremely tight throughout the United States. 21.7% is still an extremely high value, so I don't want to make light of that. But a lot of the reefer rejection rates in the Midwest have started to spike, and a lot of that due to the reasons that Nick was pointing out with a lot of the weather concerns here over the next few days with a big Arctic outbreak coming. So demand for temperature controlled trailers is definitely going to be on the rise, as a lot of these shippers can't just sit on this freight. So you can't just increase your lead times, and say, well, I'll just hold this freight until sometime next week. The conditions are not really good for that right now. So we do anticipate that the Midwest will continue to show tightness over the next week or so, especially as we're looking at some of these polar vortex style temperatures show up once again.
Yeah, Zach, I grew up in the snow belt, as you know, and my mother still lives up there, and I was talking to her yesterday about that. You see the Arctic blast that comes through, it'll freeze the lake and it'll start to slow down that snow machine. But when we call them Alberta clippers, when I was growing up, we used to call them, because they kind of where they ride down from and then across the lakes and dump. Oh, yeah. When those come through, do you see significant temporary spikes in OTRI and volumes kind of decrease, or does that kind of a non-event? It's got to be a lot larger than that. Is that part of the issue, kind of in the volatility up there in the Northeast this time of year?
Well, the Northeast volatility last week was a pretty large, significant snow event. We were talking about feet of snow in some of the megalopolis area, especially in Pennsylvania, and a lot of those heavy freight origin markets around Harrisburg. And that's a significant event. That shuts down even the coldest cities for at least a day or so when things like that happen. So that, and also the market was already tight. So when we have a tight market on top of, and then we have these little mini events that occur, that exacerbates the tender rejection impact, because normally you don't have trucks available to recover in a tight market like you do in a looser market like we saw in 2019. So this time of year is going to be a little bit more volatile when you see tender rejection rates up over 20%, because they're going to be a lot more sensitive to any kind of disruption. And of course, the polar vortex type temperatures is more damaging to freight and very hard on equipment. Alberta clippers, not necessarily a long-running event, so you don't see as much impact from those things. And again, those storms tend to hit those Great Lakes areas. A lot of freight market activity up there. Cleveland, probably one of the bigger ones, but they're very accustomed to handling the snow, as your mom knows, up there around Cleveland, Ohio.
So, Zach, let's talk about something that happens year after year around this time. We're gearing up for it. I never moved too much produce myself, so I don't have the calendar ingrained in my head. But with the reefer market the way it is right now, we're coming into produce season probably in the next few weeks. What does that mean for that market?
Yeah, so I think anybody that's hauling produce right now can expect pretty high level of rate premium on hauling those goods right now, because the market's already tight, as we mentioned. 41% overall reefer rejection rates throughout the United States. A lot of that's happening in the Midwest right now, as I mentioned, but that capacity is much more limited than the dry van side of things. So if produce season does start to kick off with any kind of, we've seen it on, some of the grain side of things. Grain's already been popping on the bulk load side. But if we see any kind of volume like we're seeing on some of these other commodities, it's definitely going to have, like I said, an exacerbated effect on this type of market, because the market's already tight as it stands, and any kind of disruption, especially if we see a big push off the West Coast once again, is going to have a very high level of upward pressure on rates.
It definitely will. It's gearing up for that, definitely. Well, thank you so much for those insights, Zach. We'll catch you on Thursday with another update for the freight markets, what's moving in and out here. And
Thanks,
we have
Zach.
Eric Thornton here saying Dante's Peak. Dante's Peak is a James Bond.
Good one.
Versus a volcano.
Good one. About Avalanche.
Avalanche would be good too, yeah.
Yeah, right?
Yeah.
I mean, I think there was like 7 of those B movies on Sci-Fi.
I think so. Avalanche. I got into the Mount Everest. Everything about Mount Everest. It was fascinating.
Yeah, very cool.
There was a weekend binge of that. But let's flash forward over to economic numbers and see what's happening in the economy with Anthony Smith, our lead economist.
That's right, Kevin. So the latest we have is for the economy is factory orders, which we have that got updated, and it shows that there is a 1.1% increase for the month. So this is good news, showing that there is some momentum building just as we were anticipating. So it's kind of right in line with what we were expecting. and just kind of a little bit above our expectations. The other thing is within that order, that new order or the factory orders, we saw that non-defense capital goods new orders indicative of business-to-business activity increased as well. And we saw that was up around 0.7%. So showing that there is some momentum building, not just for overall manufacturing, but for business purchases as well.
So that gives us a really good indication of the trend and the momentum of CapEx spending, doesn't it, Anthony?
It does, and it shows that we're on a good trajectory. Of course, it's going to come with its headwinds, and as always, I have to talk about some of those headwinds within the industry. That's going to be employment. That's going to be a little bit tight right now when we're looking at manufacturing employment. The other industry headwind is going to be prices for commodities. Commodity prices are at a high right now across the board. There are shortages, and that's going to potentially impact downstream effects when we're looking at what's overall going on with manufacturing.
So, I mean, as we look at manufacturing, you see, obviously, non-defense capital goods up, and we saw Class 8 orders up as well.
Yeah.
But the worry is getting the raw materials across, right? So you still have backup in trade lanes and stuff, and that's one of the worries as well. Are you seeing that as one of the headwinds?
Definitely. I think that's going to just add to the chaos. And so we're also seeing, like you mentioned, that's being kind of pushed back. That's going to add another variable to the fact. And then we have backlogs, and they were having supply shortages in addition to those backlogs. So production's in a good place right now, looking like there's a lot of momentum behind it, but there's just so many headwinds. And so it'd be a shame if after such a slow grind for manufacturing within the U.S. that these would be the variables that kind of halt and kind of reduce some of the speed for overall activity.
Yeah, that is really a headwind because industrials are just now showing signs of life, and because of raw materials, you're saying that could pause or put the brakes on a little bit of this momentum that we're seeing.
Definitely, that raw materials, commodity prices, and then those employment limitations. Speaking of employment limitations, we got the unemployment rate that was also released last week, showed there was around 6.3%, so a slight decline, but I don't trust it. I think that it's a little bit higher than what we are seeing right now. When we're looking at that number, we have to keep in mind that this taking into account people that are actively looking, not taking into account discouraged workers, and so that's going to short us around, I think, somewhere around 4 million or so. So that number could actually be much higher. Now, when we're looking at initial jobs claims, which we're going to review on every Thursday here, when it comes out at 10 a.m., we see that it did hit a 2-month low, but different measure altogether and still very, very high. So we're still in the hole and short some 10 million jobs or so. But looking at that unemployment number, good to see it come down, but is it really that low? I don't think so. I think that we're looking at a lot of discouraged individuals that are not actively looking for employment right now.
Do you think it makes a lot of sense? Sorry. Do you think it makes a lot of sense to keep an eye on that U6 number on unemployment right now because of the volatility and kind of what we're going through?
Definitely. I think that makes perfect sense to look at that number and really kind of take in account from all measures, from the initial jobs claims, that U6 number, the unemployment rate, the ADP, putting out their reports. And so we really have to take into account what all these reports are saying, filter it, and really kind of come into your own consensus and really kind of being able to see what all the data is saying in a consensus way and what are some of the common themes that we're seeing from all of those reports.
Thanks for that update, Anthony Smith, and look forward to having you back on Thursday to talk about those initial jobless claims and see if the trend downward continues.
Yeah, and hopefully it does, and and the jobless claims, they continue down, and the unemployment rate does go down. Mm-hmm. Hopefully he's wrong, but I trust Anthony. He's a pretty smart guy.
I do too. I definitely do too.
To have his finger on what's going on, but hopefully we can get the economy cranking and the vaccines out there and things moving. We've had our fair share of fun over the last year, and hopefully we can enjoy some good fun this year.
Hopefully
right?
we can.
But let's talk about what's going on across the pond in Europe with Brexit and how their supply chain is holding up. We have the senior manager of supply chains at the Holland International Distribution Council, Jelle de Rooij. Hopefully I didn't butcher that too much, Jelle. Very welcome to you to come to the show. Thank you so much for being here.
Thank you very much, Michael. No, that was okay. Thanks for having me, and glad to shed some light on the topics you just mentioned.
Great. I got an okay, Kevin.
You did get it okay?
I'll take that.
That is good.
Yes.
That is good.
Considering the first time I talked to him, I called him Jelle.
Exactly. It's improving.
I'm getting better. We'll have you on a few more times. I'll get it right eventually. So, if you can, Jelle, tell everybody, a little bit of background about yourself and what the supply chain or what you do there in this senior manager supply chain at the Holland International Distribution Council. A little bit of background, please.
Sure. Well, HIDC is a council in the Netherlands, and we are a logistics matchmaker. So we help foreign shippers in setting up their supply chain for Europe. We connect a company from the US with our member base. We have around 300 members, logistics service providers, facilitating companies. And by doing so, we help them in setting up their European supply chain solution.
So when we look at 2020, COVID, kind of how did things change in Europe and shipping, both internationally and domestic?
Well, a lot has changed, of course, and you can really see kind of a waterbed effect, if you like, from, say, the lockdown that started in China and at the later stage, came into Europe. A lot of products were shipped to Europe still, but then weren't sold. So warehouses were full. Containers were not returned to the Chinese market. So there really was a big disruption of the entire flow of goods coming into Europe and then into all the several countries. And we're still seeing today the effects of that because of the capacity in the ocean freight still being limited. The prices are skyrocketing. And we really see a start of a new way of organizing logistics in redesigning supply chains.
So you're seeing the container crunch and capacity backups there as well out of China. Is it as drastic as it is here in the United States? We've got we have 50 ships at anchor right now trying to get through the port of LA. Is Rotterdam as backed up, or are you guys faring a little bit better than we are?
Well, the capacity is still coming our way, or the ships are still coming our way. It's just that the limited capacity compared to pre-COVID levels is limiting also the number of containers that come to Europe. So indeed, it's a new balance between certain price levels and capacity.
So another thing, Jelle, is here we've been having some concerns over the infection rates of COVID at the actual within the terminals, right? And there's been some fear. I don't know how at least enough to make headlines and some discussion about it, and some movement on who should be getting vaccines as far as prioritized possibilities of shutdowns. How is the outbreak there within the port? Is it operating at full strength? Are they seeing any slowdowns because of that, or is there any danger of a shutdown or anything?
No, not at all. During the entire pandemic so far, the port has been up and running 100%. Strict measures have been taken, and all the necessary arrangements have been made to keep it up and running. So from that point of view, no disruptions at all. More in the flow of goods and the new, redesign of how goods are shipped from China and then into Europe.
The other major storyline is Brexit and how that affects both the EU, right, Europe, and the U.S. and trade between what once was two parties, now it becomes three. How's that? How are you seeing the ramifications of that and from where you're at?
Well, you see that by leaving the internal market and the customs union for January 1st, it has brought a lot of disruption between trade between the UK and the EU. You see that with the entire new formalities, customs formalities, new VAT regulations, that especially the flow from the UK into the European mainland has dropped drastically. In January, it dropped about 2/3 compared to last year. And that really is a sign that the new formalities and the new red tape, if you like, is really putting a burden on trade with the EU. So a lot of companies are now really looking at redesigning their European setup, looking at a small operation for the UK market, but also a solution for European mainland. So a European distribution center set up purely from the UK is definitely not working anymore right now. So something to consider is to move your warehouse and your supply chain for the European mainland part to the mainland as well.
And we have a comment here on LinkedIn that I would like you to go further down into, because I think it's a really good topic, and it's from Ann Wilkinson, and she's a trade lane manager at Pegasus Logistics. She says, the Port of Rotterdam has made huge investments into automation, something the U.S. port labor unions work hard to limit. Can you go into kind of the technology investments for automation in Rotterdam and in European ports?
Yes, well, the goal of the Port of Rotterdam is really to be the smartest port out there. So it's really one of the main objectives to invest heavily in these kind of developments, but also to really bring practical solution to shippers, to steamline operators, in which they can use data showing when a ship will arrive, when your container will arrive, when the next step in the chain can be taken by putting the ship or the container on a barge ship. So really bringing that all into a visible solution is what the port is working on day in, day out. Besides that, there's also an automated way in exchanging customs documents, especially to the UK, now very important. It's a system called Portbase, in which all this transfer of export declarations, etc., is done in an electronic fashion. So that's definitely a big plus for the Rotterdam port and how it's operated.
Yeah, definitely. And you know, I found it interesting when you were talking about some of the effects of Brexit and how the companies are splitting up their supply chain a little bit now, right? So they're a smaller operation there in the UK or vice versa with mainland Europe. Are they mainly looking for those spaces there in your neck of the woods, so to speak, there around the main port of Rotterdam there, or are they looking further inland? And when did that start? Were people getting a head start thinking this is going to come through, we need to start doing this? Or is now there a rush to try and set this up now that they found out that it actually happened and they woke up and said, whoa, wait a minute, Brexit happened? We need to fix something.
Well, actually both. And we've really seen, because as HIDC, we've been following the developments closely the last couple of years, of course, also informing our network and companies in the UK and in the Netherlands. But as the Brexit was delayed a couple of times, many companies did take action before March 2019, when it was still quite sure that was the D-Day.
Yeah.
But after that, delay after delay made many companies also go back in a situation and say, okay, let's wait and see what will happen now. And with that development, many companies actually still fought till late last year, when the trade deal was announced, saying free trade, no barriers at all, thinking, okay, there's a deal, we can now trade freely with the EU. But that's not true. These customs formalities were there or were known quite a while already. And now, with the companies needing to act, we as HIDC as well see a spike in the number of requests since last month. It's very busy, and we're of course glad to assist.
Yeah. So here on this side of the pond, we talk a lot about nearshoring, reshoring of manufacturing and production to the U.S. How's those conversations in Europe?
Yeah, they are also alive and kicking, I would say. The pandemic is still, say, in a more an operational flow and still making sure that we manage it. But looking at the long term, it's really important to also make it a redesign of supply chain. So be less dependent on one source, less dependent on one supplier, one location, have more safety stock in certain regions around the globe. So that's what we already see happening, and I'm sure it will continue to be a hot topic for the years to come. And also looking at, say, European market with the production there, and then take care from a location in Europe, a location in the US, and also in APAC. So it's definitely a hot topic. Yeah.
Yeah. Excellent insights. I really appreciate you coming on today, Jelle, and hopefully we'll have you on again soon. If you'll entertain that invite, we'd love to have some more regular conversations with you about what's going on there. But in the meantime, we've gotten a lot of comments and a lot of interest in what's going on there. How do people reach out or and learn more about HIDC? Sorry, and tell them how to get your newsletter there. I think thanks Stan for signing me up for that. I've been enjoying it and reading it. Very informative to learn what's going on there in Holland.
Oh, glad to do so. And please visit our site, hidc.nl. That's our global English site where you can find a lot of information about our council, but you can also ping me a message, of course. And would love to be on the show again and to tell a little bit more next time as well. Thank you for the invite.
Thank you for joining us.
Thanks. Thank you. Have a great day, Jelle. Thank you.
Interesting.
It is. I'd like to dig in a little bit further as to what is going on there. It was a good introduction type of interview with Jelle, and
we talk a lot about Trans-Pacific a lot of times, but I wish and we should continue to talk more about transatlantic and also South America, because those are two other regions of the world that are very important trade partners.
They are, and people don't understand the differences in how things move across Europe, right? I mean, until you start doing it, you don't understand the different dynamics between trucks and trains there as versus trucks and trains here, and ships, and then customs, so on, and just what it meant for BREXIT. And what the European Union did for trade without customs and that type of stuff, right?
And we're about to talk to someone else. Our next guest, Steve Ferreira, CEO of Ocean Audit. He knows how things move in Europe as well as all around the world. How are you doing today, Steve?
Hey, Kevin. Hey, Michael. It's so great to see you guys and doing terrific. And yourself?
We're doing great ourselves. We are. Thank you for joining us today.
Well, this is the special edition. This is speed dating for the container shipping industry. And today you have the chance to be at a table with new contract plans for 2021. You can be at the table with enforceable or performance-based contracts. You can talk about what percentage of the market will bite on these new contract ideas. You could have a seat with the forecasting beauty. You could have a seat with Chinese New Year resetting. You could have a seat with NVOC to VOCC mix. And you can have a seat with the queen of free time. Which date would you like, Kevin?
Hold on a second. Let me jump in here. I know you asked Kevin that. Tell me about this thing called performance contracts, because I'm not so sure. What are they going to? Absolutely, I'll have it across the Pacific and delivered to your door within 6 months. I mean, is that what they're agreeing to? What's this performance contract we're speaking of?
Performance-based contracting has been, we've seen some fringes in performance-based contracting, even when we didn't have the auspices of Containergeddon. But we're talking about where transit time is guaranteed, space is guaranteed, and if there are, enhancers that break those covenants, there's penalties and fees. So performance-based or enhancement-based contracts are really starting to come more into vogue, where there's some more teeth into the T&Cs in terms of how they're enforced, Kevin.
Gotcha. I would think Piton.
Michael, excuse me.
I would think Piton wants to look heavily into those.
I would think Piton does. Are you familiar with that, Steve? The term Piton?
Peloton?
Yeah, Peloton. Yes,
yeah, absolutely.
Yeah, Andrew Cox just taught us a new word earlier today. So have you been following the issues and the challenges Piton has been having?
I did a story for Business Insider about 2 weeks ago on Peloton versus another competitor, and it's just interesting. It's easy to see, as containers don't really fool anyone, just how overwhelmed their system has become. So I'll say that certainly they're trying to fund their movements with using new customer money for old supply chain issues. It's a very intriguing issue.
So using new customer money for old supply chain issues.
Well, the issue is that they're taking orders hand over fist now, and they're trying to throw $100 million at the supply chain. And so they're basically, it's an interesting strategy. I'll say that when you can fund prior customer orders with new customer money. Where have we heard that before? Anyway.
I know. That's what caught my ear. That caught my ear. I was like, whoa.
Uh-oh.
Guys, I think the idea here is that performance and enforceable service contracts, I only see that, as do some of the experts that we're interviewing, by the way, for the Global Maritime Supply Chain Conference exclusively on FreightWaves, is that we're talking about less than 2-4% of clients will start to have those enforceable and performance-based contracts. Really the deep thinkers of the Trans-Pacific and Transatlantic that have the technology platforms to really look at what a performance or an enforceable contract might be. I think the rest of the gang out there, they're going to have to go to that speed dating table with kind of that dark seat and not really be sure what they're getting unless they make some real causal effect changes. And I think one of the biggest changes this year that no one's talking about is carrier free time. The carriers simply are not going to give it to the market.
Yeah, there's a lot of things going on, and so Steve, a BCO like Piton, what should they be doing now? What steps should they be taking? Measures should they be taking now to and possibly should have already been taking to position themselves for these negotiations in 2021?
Well, I think the issue with Peloton, quite candidly, is the infrastructure and the silos within logistics, supply chain, and finance within Peloton. I have a deep inside window there, and I believe that the unmitigated growth that they are currently have a zillion jobs posted, and I know a couple of the jobs are centered around key logistics folks. So I think they've realized that they may perhaps not have the infrastructure or the right players in place to handle the rapid changes and movements of growth in that particular supply chain. So I would say it's an internal issue coupled with the external container-geddon. And so they've kind of rolled snake eyes, in my humble opinion.
I think once they start really paying those air cargo bills in full force, so they'll really understand how much underwater they are. You mentioned, I'm glad you did, to the Global Supply Chain Week that we have coming up starting February 22nd. You've been a large part of that, Steve, and you are interviewing none other than Gary Vee during that conference. And can you give us a background of how you went out and pursued and sold Gary Vee?
Well, it's interesting with Gary Vee, right? My wife is Russian and Gary's Belarusian, and he speaks the language. So I actually had my wife make a few cameo videos with me, and we sent him to his producers and his production team. I actually found a small refund due back to his company, through the channels that I have. I sent him a telegram. I must have touched him 7 different ways. Wait a minute, does that make sense? That's interesting. Somebody once said you have to touch a client 7 times to get a response. And so finally, I think that I think I was just pestering him too much. I think that's really what it came down to. But I think personal branding and storytelling is right up my alley, and certainly if I could relate that to what he's doing, we're glad to have him be part of FreightWaves for that persistence.
Persistence, pestering and persistent. There's a fine line between those two, aren't there? Pestering and persistence.
There is. I think that one of my new books is one of the chapters that I wrote in my new upcoming book. Quitless, the power of persistence is specifically about that.
Yeah. Once the restraining order comes, you've crossed the line.
So far, so good. Knock on wood. I don't want...
Spoken from experience, I'm
Yes.
sure.
But I'd like to talk about, if I have a second,
Yes.
I think it's kind of interesting that the forecast, how we're looking over the next couple months. I think some of the famous economic guys in container shipping that live in Europe, I won't say names, but I think, a lot of them have always looked at this phenomena will die out in March, April. I think that we're seeing a strong preponderance of continuation of this container-geddon market, through June at the least. And I think when we have more stimulus in the Biden administration, we could see another second round of chaos take us all the way through Q3, Q4. So I think this is the new normal. I mean, it's good that we're having Chinese New Year to do a slight reset operationally on some blank sailings and to get some of the potential backlog in LA, Long Beach cleared up. But it's part of the bell curve. I think we're going to be right at it, come the return of the factories. So I think clients should really beware and start looking strongly at multi-mix of NVOCC and VOCC. Right now, NVOCCs control about 48% of the Trans-Pacific, 52% obviously VOCC. I think if you're not with a freight forwarder or an NVOCC, you should get with one pronto. And if you don't know one, you should start networking and find out who's the best in the local area.
Yeah, I was going to ask you about that. You'd need to diversify that Trans-Pacific and Transatlantic and NVOCC, adding that to the mix with a vessel operating common carrier with a non-vessel operating is something that you absolutely should be looking at.
The other thing I want to just touch on real briefly is that as an expert on looking at the landscape in LinkedIn, I'm seeing hundreds and hundreds of new logistics professionals getting involved in import-export trade, and they're coming from the domestic environment. They're really stepping into this market at a very unopportunistic time for them because of everything being thrust upon them. They really need to start finding, local mentors in non-competing industries. For example, if you're talking to, somebody that makes musical instruments and you're a consumer products goods importer, that's the kind of thing you start sharing common stories to get yourself up to speed, because it's going to be you're going to skip calculus and you're going to go to advanced whatever the advanced stages is, pre-calculus to calculus, real soon.
Scientific calc.
Yeah, you do. Thank you so much, Steve. We're running short on time. So you can find Steve Ferreira from Ocean Audit on LinkedIn. If you have any questions about ocean shipping, he's the guy to go to. He responds very quickly on LinkedIn. So ask him a question, and he will be talking with Gary Vee during the Global
Kevin.
Supply Chain
Michael.
Week. Oh, thank you very much, Steve.
Thank you, Steve.
And let's do one quick another turn at the weather and see how cold it is out there today.
How about record lows in the minus 30s in some parts of the upper plains? Is that cold enough for you?
That is,
I know it would be for me.
that is. You didn't disappoint with that, Nick.
Wind chills in the 40s to almost 50 below. How about that? So, add wind with that cold weather. But anyway, we'll go back and talk about that Arctic outbreak because it really started last weekend and it's going to continue all week. So this is a prolonged period, a real extended period here of extremely cold weather, even for the northern plains and the Great Lakes this time of the year. Not record territory everywhere, but certainly much colder than normal, 15, 20 degrees below normal. We've also had records for coldest high temperatures in a few spots, with highs only reaching 0 to 5 below. So despite some sunshine here and there. But anyway, it's from the plains all the way across the Great Lakes. It's going to continue all week. And some of that's going to sink towards the southern plains. So that cold air in place at the ground is going to interact with moisture coming off the Gulf of Mexico to produce that ice storm from Oklahoma all the way to parts of the mid-Atlantic for Wednesday and Thursday, with impacts lasting to Friday. So just be super careful. Avoid those areas if you can where that ice is going to form for sure. But we mentioned, if we have time, some of the weather-related movies, some more that truckers could check out in their downtime. We got to put Groundhog Day on the list. That's certainly on the list this time.
Oh, yeah.
Even though there's not a lot of weather
morning,
happening
campers.
in the movie, it's about a weather event, Groundhog Day, right? And it's a great movie. It's a modern classic, if you will. So great Bill Murray movie. There's another one called Lakeview Terrace, which is a little more obscure, but it stars Samuel L. Jackson. It's more of kind of a thriller, and it's in Southern California, but the backdrop is that there are wildfires happening in the midst of the story and the main plot of the movie, and so those fires are kind of spreading towards the neighborhood where all this is happening during the main plot. So just another one to check out. And again, FreightWaves.com is where you can find the article with the full list, which has 4 movies on it again this time.
Thank you very much, Nick, for that weather update. Tomorrow, all day, we're going to be talking about vaccines. We're going to be talking about healthcare and pharma.
Oh, yeah.
Distribution, supply chain, transportation, ordering, inventory, everything under the sun. And that's a full day, 1-day event here at FreightWaves.com. You can watch that. You can register as well. Live.FreightWaves.com. Join our chat with the video. You and Duna will be manning the live desk during
We will be, and we've got a couple live interviews, or maybe more. We're working on those, but we have 2 live interviews at least with CRST's Chad Bruick, President of Expedited Solutions, and ArcBest's Danny Lowe, President of Asset Light Logistics, Chief Yield Officer.
And I sat down with Katrina Liddell from XPO, the President of Global Forwarding Expedite, talk about vaccine distributions, and also Glenn Kapka from Four Kites, talking about visibility for pharma and healthcare.
Did his brother just win Waste Management, or is there no relation?
I don't know if there's a relation or not, but we'll see. Yeah, so we'll definitely see. That'll be a good question for him. But
it's incredibly interesting. I mean, you got to tune in for tomorrow. I mean, it's unbelievable when you Google, or not even Google, look on LinkedIn and look in just health and pharma. For titles, and find that there's people who are like global manager of vaccine testing logistics, right? It's just for the verification of the logistics and stuff. It's a really intricate kind of vertical.
It's fascinating
very, very
too
fascinating
right now,
to me.
because
Very
it
interesting.
dominates the global headlines with vaccine distributions, and we're going to be talking about how companies distribute this vaccine as well as others. So yeah, again, live.freightwaves.com. You can go in there and register for that event, and also that's where you go tomorrow morning to view it. You'll get a notification for that as well. And then on February 22nd, we have the Global Supply Chain Week, Monday through Friday, where we hit different verticals, and Monday is aerospace, defense, and manufacturing. Tuesday is CPG and retail. Wednesday's food, produce, perishables, CPG. Thursday's automotive, and then Fridays are those industrials, mining, chemicals, and of course, oil and gas. So that's Monday through Friday, and then March 1st through 3rd is global maritime, and that's when Steve Ferreira will be doing a keynote with none other than Gary Vee on that.
Very interesting. That's going to be awesome. The dynamics between those two are going to be awesome.
It is. It definitely is. I love it. You guys had a great What the Truck yesterday. What's the recap on that one?
Yeah, so we actually did. We talk about Tesla buying $1.5 billion in Bitcoin and possibly taking payment for it in the future. So they're getting themselves liquid in Bitcoin, if you will, to take it up. $19 billion of cash on hand. They spend $1.5 billion of that to purchase Bitcoin. Tells you how serious they are about that.
Well, how much they bought in Dogecoin?
I don't know. I don't know that they had, but I think Elon has himself, right? We talked about avocados, et cetera. We also talked to Ryan Walsh, co-founder and CEO at Valkyrie, which is the mailbox or receptacles for drone deliveries, which is really cool. Not talking about the actual drones, but the setting up the infrastructure to be able to accept these both on a commercial and on a private scale, which is just tremendous. And we also had Scott Cornell from Transportation Lead and Crime Theft Specialist at Travelers, and C. Goodwin with her comeback story. So check that out.
Yeah. And you can get it all on Freightcast on your podcast forum. What the Truck, Put That Coffee Down, Midday Market Update, Freightonomics, etc.